So, hello, Simon. Welcome back. I'm so thrilled and honored to have you. You are the Senior Vice President of Guaranteed Rate Affinity Mortgages, and we need you. We cannot do our real estate without you. So, let's get right into it. What are the top five things you shouldn't do when buying a home?
Hey everybody, thanks Hedda. Great to be here with you again. Yeah, I've got top five things that if you're shopping for a home, you're in the process of buying a home, these are things you should not be doing. These are my top five, right? Number one, do not forget to get pre-approved. You'd be surprised how many people go out there shop, look for homes, have no idea what they can qualify for, and the agents don't ask the question either if they've been pre-approved or what they can afford. So really important. Never early enough to get pre-approved. Figure out what your budget is. Figure out what that payment looks like. Figure out what you can really qualify for because it's very competitive out there, and you don't want to be left hung after you get an accepted offer. Then scramble to try to figure out what the pre-approval looks like. Get it done as early as you can. Number one. That's number two. Do not absolutely do not wait to put down 20%. A lot of people still think that 20% down is the absolute must for putting down a down payment on a new purchase. A lot of old school people as well. They talk to their grandparents are like, you can't buy a house without 20% down. That is not true anymore, right? There are absolutely a lot of different ways to do that. And this is about capitalizing on opportunity, right? Opportunity is really important. Opportunity is very critical. And if you wait, guess what? That home could be much more expensive. You can lose out on a great opportunity as well. So there are programs out there with far less than 20% down, in some cases as little as 3% down, in some cases as little as nothing down at all. So talk to your lender, make sure you know what's available to you, right? Number three, do not buy more than you can afford. So that means when you get pre-approved, it's not about figuring out what's the most I can buy, but look at the payment, right? What are you paying in rent today? What is your comfort level with a mortgage payment? And that includes not just the principal and interest, that includes the property tax, insurance, if it's a condo, HOA dues. Know what you can afford and don't buy more than you can afford. In this current market, interest rates are high, right? Do not lose a house over interest rate, right? People are so hyper focused on interest rate, and rightfully so. I totally get it. I totally understand. But we have too many buyers that are losing and just walking away because the rates might be too high for them, right? We have the ability to refinance in the near future, right? There are programs out there now where the seller can pay for a temporary buy down to reduce your interest rate by 2 or 3% for the first 1 or 2 years of your loan. So there are strategies out there to help you drive that interest rate down, but don't lose over the interest rate. All right. And last but not least, number five is do not take on any more debt, right? When you get pre-approved, we look at your debt, we look at your income, and the debt that shows up on your credit report is calculated into your buying power. So what does that mean? That means if you're in the middle of or in the process of trying to shop or buy a home, don't buy that new car, right? Don't add any more credit card debts. Don't go out there and start buying appliances. It's very critical to understand how much debt impacts not only your credit score, but also the amount of minimum payments that show up on your credit report, which again is all factored into your buying power. So make sure you talk to your lender to understand whether or not you should or shouldn't buy that car. And in some cases, you may have to wait a few weeks or a few months to get that dream home of yours.
Back to number four on how people are waiting for these interest rates to change, and you really hit it on the nail that they could have a missed opportunity here of getting a great house. Because as a realtor, I do lowball for my clients, when I'm representing the buyer. Obviously, when I'm representing the seller, I'm staging it perfectly so we
Sure.
get the top dollar for it. So that's the reverse. But as a realtor, I'm also seeing a lot of owner financing opportunities. What do you think of those?
You mean when the seller finances a portion of the loan?
Yeah.
Um, I mean, there could be some value there. I think it's a very case by case basis in terms of why that would need to be the case, right? The seller financing, as we call it, or seller carries, are going to be a shorter term loan, right? Usually about 5 years minimum is what we require, and interest rates sort of market rate. at the time. But in some cases where the buyer maybe can't qualify for more money, or for some reason may not be able to qualify at all for a loan, the buyers or the sellers may in fact, opt to provide some financing, act as the bank, if you would. So, again, opportunity could present itself in that case, but I will say always refer to an attorney in those circumstances. You want to make sure you get all the paperwork in order. You want to know what you're getting into, especially when it's seller financed. But yeah, I mean, I think that's something that we're seeing more of these days. And it's not something I would walk away from. I'd just be very diligent in understanding, what the terms look like.
So do you work with the potential, the buyer when they come to you for a loan, and do you make sure that that part of it is also buttoned up, like when the owner does offer to carry perhaps 10 or 20%? Does that help them get a loan with you because they're coming in already with some money?
So it depends, right? Not every investor allows a seller carry in a transaction. So you'd have to make sure that the bank or lender allows that. But no, we wouldn't. That's not something we would actually be involved in. That's a very, those are legal documents that have to be written up. There's a note that has to be drafted. And like I said before, that's something you'd have to get a real estate attorney involved in to make sure that all the documentation is in order. So we would either allow it or not allow it, but that's be the extent of what our involvement would be.
I think it's important, and wouldn't you agree that before a realtor even spends time with the potential buyer, that they already go to someone like you to make sure that they will be able to get a loan, or we're wasting their time, they're wasting our time? How important is the role of the realtor here, to assist the buyer?
Much more important than realtors give themselves credit for. So, I think realtors nowadays, especially given the current market, are not being assertive enough, I think, to guide their buyers in the right direction. And what I mean by that is there's a lot of lenders out there, right? You want to talk to a lender who's credible, first and foremost, right? You want to talk to a lender who's well known in the area, because a lot of times, when you submit a pre-approval letter and the listing agent sees a certain banker name, that could go either way. Sometimes they get turned off, and sometimes they recognize the name. They may have done business with them before, and it gives them a comfort level. So credibility is very important. Follow guidelines from your agent. If your agent has worked with someone who is also seasoned and is very reliable, then that is a good place to be. Most buyers will just run to their local bank to get pre-approved, and that's not really a great place to end up. Maybe a good place to start, but not always the right place to end up. So always, take referrals from your agent, look up the individual, make sure they're credible, ask the right questions. Just like you would with an agent, you want to interview your lender to make sure that the right fit for you, right? So that's really, really key.
Okay, well, thank you so much. To be continued on the next 5 things that people need to do before buying a home. Thank you.
You bet. Thank you, everybody.